Well, commodities have done very poorly for the last 5 years, and they've underperformed inflation by about 5% per year compound. And that certainly was not what people were hoping for, and they are therefore basically selling low.
What makes the case for them right now?
Right. Well, we think that the real case for commodities is more a broad case for real assets, but why commodities right now is because in the long run, most people would agree that low inflation is good for them and technological change and progress is good for them. But wouldn't you like to have a hedge in case one or both of those things doesn't happen? And commodities benefit from higher inflation and from technological stagnation. Now, we don't want to be betting too much on that either, but if it happens, it's really nice to know that a portion of your portfolio is positioned to do well nonetheless.
And what portion generally do you suggest to clients?
So we would say that real assets broadly, of which commodities are just one portion, should probably be about 10% of the exposure that a typical client has to riskier, higher growth assets.
And I'm going to bet most people are not there.
Most people are way, way below.
Yeah.
And the reason is that, look, inflation has not been a real factor for a very long time. Inflation has been under 2% for the last 5 years. And with inflation off the table, it's not surprising that commodities haven't done well, since inflation is the thing that they respond to. Another thing is actually we have had a fair amount of technological progress, and it's particularly been benefiting consumers through things like lower energy prices. Oil, for example, has actually had a negative 16% compound return in the futures market, and actually natural gas is even more amazingly down 41% annualized over the last 5 years. That's a great thing for most of the consumers out there, but it's a terrible thing for a commodity investor.